All right, good evening, everybody. It is Tuesday night. It is October 18th, 2022. And today we are going to be talking about, I would say, the last major investment bank that reported earnings, which is Goldman Sachs. So Goldman Sachs did beat on both the top and the bottom line, but their profits or their net income was down substantially. Profit fell about 43% to about $3.0 billion or $0.7 billion. Now on an EPS basis, analysts were expecting about $7.69. Goldman Sachs beat that at $8.25. On the revenue side, Goldman Sachs also beat on the top line, coming in at $11.9 billion. Analysts on Wall Street were expecting 11.4. Now, nothing out of the ordinary for this specific earnings report. Now, we knew that investment banking revenue was going to fall off a cliff, which it did, and this wasn't exclusive to Goldman Sachs. I mean, we've been talking about this over the past week and last week as we did a deep dive into the earnings reports of JP Morgan Chase, Bank of America, Morgan Stanley, and Citi and the like. Investment banking revenues, merger and acquisition revenues, equity underwriting, significantly lower. But there was a very interesting piece of the earnings call for those of you who listened, or maybe those of you who didn't. But Goldman Sachs is going to do a little bit of a reorganization here. And, you know, a little bit what we talked about yesterday with the Marcus by Goldman Sachs, Goldman Sachs trying to break into the consumer and retail sectors of banking hasn't really been that successful. Now, they're categorizing that under platform solutions, and it was actually kind of funny on the earnings call. David Solomon, CEO of Goldman Sachs, seemed a little bit agitated at all the questions in and around their plans on breaking into the retail banking segment. Maybe, you know, some of the analysts were alluding that may not be the appropriate choice for the bank. Mainly because the big moneymaker at Goldman Sachs is investment banking and markets, right? You think about Goldman Sachs, you think about big investment banking deals, IPOs, equity underwriting, and sales and trading. You know, they haven't been a big player in retail. And I think, you know, being that their ventures are not profitable yet, you know, maybe some of their investments are a little bit ill-willed, but we'll talk about that a little bit later in the stream. Another thing I wanted to cover, and I'll say hi to everybody in the chat in a second, but yesterday the Empire State Manufacturing Survey came out, and manufacturing activity in New York fell off a cliff. So we're going to be doing a line item review of that report, and we are also going to be talking about the National Association of Home Builders. They had a big piece of economic data that was released today, which is the housing market index for October, that also fell off a cliff. And that's the recap, everybody. Let's see who we have in the chat. Hopefully your week is off to a good start. I see the one and only Sunshine After Rain. I see Tone Rick. Good to see you. Thank you for joining the live stream tonight. I see Alton. I see Vinny Castellano. Welcome, Vinny. Good to see you. You know what, let me close this window and we will head down to street level. Vinny Castellanos is the Yankees won tonight. Very nice. So what does that mean? Are we moving on or something? I'm not a big baseball guy, but that's good news. Sabrina Fair is here. Good to see you. Patricia Ivory says hello, Tom and everybody. Hey, Patricia. I see Dusty Cole. I see Charles D. Says, hey, Tom, any info on Mobileye IPO? I don't, to be honest. I don't. But what have you heard about it so far? I'm always interested in learning more. Connie R is here, says greetings from Mexico. Welcome, Connie. So Vinny Castellanos says the Yankees play Houston next. Okay, very cool. Paulo says, hey, my friend, how you doing? I'm doing good. I see Dan Zhang in the house. Good to see you, Dan. And Chris Beeman. Let's see if we can exit the elevator without any internet issues. All right, team, now we are on ground level. We are on the corner of 31st Street, East 31st, and Madison Avenue. Hope everybody had a fantastic Tuesday so far. I see Dan Zhang is here. MN says hi. Good to see you. Brad's brain. Always a pleasure. Now, I will say it is an absolutely, well, maybe that's a little bit over embellishing it, but it's a pretty cold night out here tonight in New York. Now, I think it's going to get down into the 40s. Yesterday, the rain brought in a pretty, I would say, pretty forceful cold front. But tonight we're actually going to be walking uptown. It seems as if on the live streams we've been walking downtown a lot. Last night we went to Little Italy, Chinatown, and the like. So I think tonight we're going to head uptown. I see Western Mass Dave says, hey Tom, a turnaround for Netflix I see. Yeah, I mean, Dave, I see in the chat, good to see you, Destructionist. Yeah, Netflix did report earnings after the bell. And one of the interesting things about that, I mean, that stock has been getting absolutely obliterated this year, decimated, however you want to describe it. Now, I posted on my Twitter a monthly chart in Netflix, going all the way back to when it IPO'd. And it seems as if we're finding a little bit of support on that multi-decade trend line. However, for me, I'm just not interested in, personally, Netflix as an investment for me. But, they did report a good quarter. I mean, we cannot deny that. But here's one of the things I'm a little bit concerned about as it relates to Netflix. And we sort of talked about this last night, because they did add a lot of subscribers. Now, my concern is that what's to say that a lot of these subscribers aren't technically net new, right? Maybe these are people who have resubscribed to the service, maybe because their, a particular show they're interested is coming out. So the stickiness to the business may not be as sticky as it once was. Maybe if there's a new show or something like that coming out, people will resubscribe to the service, and then once the season ends, they'll just binge watch the whole thing and then churn. Now, I don't know how much of a sustainable business model that is. Now, I'm sure Netflix will go on to do well, but I think you guys know my concerns about the streaming industry in general. I think it's getting very, very crowded, right? You have so many individual streaming services like, we talked about Peacock, you have HBO, and I think it's just a very crowded market. But Reed Hastings' team did put on a very good quarter. Charles D, good to see you. Dan Zhang says, I only use Netflix to watch stand-up comedy most of the time. Warwalkers is a pair of 80s in Miami. Yeah, it's getting cold here, Warwalker. I'm gonna have to make a trip down to Miami ASAP. So this is East 32nd Street, Park Avenue. We're gonna be walking uptown. You can actually see the very, very top of the Chrysler building from here. But we're gonna head straight for the MetLife building and Grand Central Station. But yeah, it was a big earnings day on Wall Street. TMB says, just subscribed to Netflix for the winter, planning to drop it in the spring. Yeah, so I mean, that's exactly a good point, and that's one of my concerns, right? I think when you talk about subscription models, right, especially as it relates to software or a SaaS model, right, a software as a service model, one of the main things or the variables that goes into evaluating these businesses is the churn rate. Because if you're adding, let's say 3 million subscribers, I think that's what Netflix added. But if you're just churning them out 8 months later, it's sort of very hard to evaluate that business because it's a very up and down, sort of like roller coaster type of revenues there. But where I do see maybe a little bit of a beam of hope, I think Netflix announced that they're coming out with like a $7 streaming package that will include advertisements. Now, maybe that will entice more people to keep that subscription on for longer, but I'm not so sure. Not so sure. Roy S., please get well soon, my friend. It seems like there must be like, a cold or something going around everywhere. Almost every single person I've talked to today, as it relates to like a client or something, they either told me they're just getting over a cold or like their kids are sick. So maybe this is like the back to school seasonal, everybody's getting sick. Wow, Paul Tricky says, I've never watched a second of anything on Netflix. Julie Ann, potentially. So we did get some very interesting data out yesterday. Oh, check out this dog. We got the Empire State Manufacturing Survey that dropped yesterday. We actually didn't have time to cover it. I forgot. We were talking about Bank of America earnings last night. We did a deep dive that I forgot to sort of give the overview of the Empire State Manufacturing Survey. So let's put this into perspective for a minute. Now, if you remember from the Sunday night Market to Look Ahead live stream, hope everything's all right here. We said that many economists that were surveyed on Wall Street were expecting a negative 2.5 reading, or a negative 2.5 reading on the Empire State Manufacturing Survey. Does anybody want to take a guess at what the actual number came in at? And while you're guessing, I want to show you a fantastic shot of the Empire State Building, I believe lit up in blue and white, maybe a little black in there for the Yankees. I think Vinny Castellano said that the Yankees won tonight. Hey, Mel J is here. Good to see you. Hope you're well. Yeah, so the Empire State Manufacturing Survey came in at negative 9.1. Okay, so absolutely abysmal reading there. However, if we think all the way back to the Institute for Supply Management Purchasing Managers Index that we covered at the beginning of the month. So for those of you who don't know, the first business day, oh, look at all these dogs here. It's like a dog party. So the first business day of every single month, the Institute for Supply Management releases their Purchasing Managers Index. And that also contracted for, I think, the 7th consecutive month. So we're having steep deceleration in the manufacturing sector in the United States economy. So I'm not really surprised that we've fallen into contraction here in New York. But I think the thing that surprised economists is that just the steep amount of deceleration and deterioration in the manufacturing sector. Now, out of those surveyed, hold on, let me give you guys a shot of the Chrysler building here as we're talking about this. Now, 32% of the firms polled said that business conditions have gotten substantially worse. Okay, so all of the manufacturing firms that were polled for the survey, about 32% of them said that conditions are deteriorating. Obviously, supply chain issues, and number one being inflationary pressures, is driving a lot of this, I would say, depression thinking. JR says, Tom, unemployment is about to rise. Well, I mean, that's what the Federal Reserve is after, right? Fed Chair Jerome Powell at the last FOMC meeting actually said that's what we want to see. We want to see the unemployment rate tick up. So I guess the bad news as it relates to monetary policy, if anybody wants to forecast a pivot, is that during I think it was 2 Fridays ago when we got the non-farm payrolls, the data actually showed that unemployment went down. Unemployment rate went down. So, hey, Tug Carter is here. What's up, Tug Carter? Good to see you. Nilla's Treasure Troves is in futures are green. Yeah, we had another, I would say, decent rally day on Wall Street, but I think we do have to keep in a frame of mind that the market is rallying into declining moving averages. So last night on the stream, I read a bunch of key levels that we should be paying attention to across the board of the S&P 500, the NASDAQ, and the Dow. And that is the 50-day moving average, which is now declining, as well as the 200-day. So it's very possible this market will rally into the 50-day and be turned away. Now on the NASDAQ composite today, we actually gapped up and we faded almost pretty much throughout the entire day. So maybe for some of those more short-term traders, if you have like a 21-day exponential moving average or something like that on your chart, you'll see price action rallied right to the 21-day and faded almost the entire afternoon well into the close. Now, I think a defining moment for this market is going to be tomorrow when Tesla reports earnings. I think that is going to be the biggest defining moment for the direction of this market. Obviously, Tesla makes up a very large portion of the S&P 500, being that the S&P is a market capitalization weighted index. D Wood says, Tom, have you ever had a low paying job? Yeah, of course, dude. Of course. Dark Horse says, conditions on the ground and not in the Fed bubble are depression levels. Yeah, they are. I mean, especially the, hold on, let me just cross the street here. So I think you're right, Dark Horse. And I think you're right for two reasons. Now, the number one leading economic indicator that I always look at is the Institute for Supply Management, the ISM PMIs. And those have been decelerating and really rolling over here for the past 6 months. And the PMIs is essentially, you're looking at the business cycle in real time, right? Now, if you want to focus down even more, you could look at, the Empire State manufacturing survey that we got out yesterday, and that fell off a cliff to about negative 9.1 when economists were expecting a negative 2.5 reading. So talk about absolutely dropping off the face of the earth there. But we also got another piece of economic data, and we're going to review the earnings report of Goldman Sachs too. I want to talk about that a little bit as it relates to investment banking revenues. We're going to get a little bit granular talking about M&A deal flow. So what type of M&A deals are in the pipeline? We'll talk about that in a minute. But the National Association of Home Builders released its housing market index for October today. And get this, the reading fell 8 points to 38. So as we know, and we've reviewed this multiple times on the stream, if you look all the way in the distance, this is Grand Central Terminal. It looks beautiful, by the way. I think I may cross here just so I could stand on this medium so I could show you guys the on-ramp to Grand Central Terminal. I don't think I've showed you guys this on the stream, but it's a pretty nice shot. Now, this is cars only, so we can't walk up here, but this kind of looks cool. The drive all the way up to the Grand Central Terminal. But economists on Wall Street were expecting a 43.5 reading. We got a 38 reading. So we're getting abysmal economic data across the board, right? Not to be, the bearer of bad news. I think we just need to talk reality here. Now, I wrote down something from this report, okay? And I was going to program the link to the report in the Nightbot, but I forgot. Apologize for that. But I wrote something down, and this was by the chief economist for the National Association of Home Builders. This is Robert Dietz. And he says this is going to be the first year, as in 2022, this is going to be the first year since 2011 where we see a decline in single-family housing starts. Okay, that is absolutely critical to pay attention to. Oh, the Park Avenue tunnel is closed. I didn't know that. So I want to ask everybody in the chat, because we do have a lot of real estate experts in the chat. So obviously, let's sort of define why sentiment is falling off a cliff here. And I think the most obvious reason is because you had a massive, monstrous move in the bond market, where the average 30-year fixed rate mortgage, as of today, according to bankrate.com, is 7.11%, 7.11%. This time last year, rates were 3%, okay? So nobody's buying homes. Transaction volumes are falling off a cliff. But the reason why I wrote this down, I'll read it one more time. This is coming out of Robert Dietz. He's the chief economist at the National Association of Home Builders. He says this is going to be the first year since 2011 where we see a decline in single-family housing starts. Now, the reason why I wrote that down is because we already have a problem with supply from underbuilding. Ever since the great financial crisis of 2008, we've had a big problem of underbuilding. So usually how it works, and I think we are going to see these price declines, usually how it works is as interest rates go up, demand will fall off, sales transactions will fall off and decline, thus leading to declines in the prices of single family homes and real estate. Now, on a longer term time frame, if we already know that we have a big problem with supply, and this is going to be the first year since 2011 where single family housing starts are declining, what do you think that's going to do for supply 5 to 10 years from now? It's going to be 10 times worse than it is today. So do you guys think that's going to be a material impact? I'd love to know your thoughts. But now we are Pershing Square here at East 41st Street. Hey, I see Jonathan Richards. Says, hey, Tom, good to see you. Jonathan, always a pleasure. Hopefully you had a fantastic Tuesday so far. Van says, I still do not understand why everything is collapsing with the market. Dark Horse. Dark Horse's insanity is buying overpriced real estate at 7%. John, very nice. Yeah, Dark Horse. So I understand. I see all your comments. You know, you have to be insane to, invest in a property at 7.5%. But what do you think are going to be the ramifications of these higher rates with housing starts falling off, right? Let's say if we think about it a little bit deeper, or a little bit more analytical than just saying, yo, it's crazy, who would do that? You must be an idiot to do that. I think those are pretty obvious statements. Ken Glass is here. Good to see you, Ken. Always a pleasure. Says good evening, Tom. Man, Grand Central Terminal looks fantastic tonight. Now, speaking of the real estate market, on Friday, I think is going to be the most important piece of economic data as it relates to the housing market, when the National Association of Realtors is releasing their existing home sales. Now, here's a prediction for that. I think that existing home sales are going to come in well below analysts or economists' expectations. I think we're seeing a pretty common trend here. If you have rates go from 3% to 7%, I think they're on their way to 10% maybe by the end of next year. I think you're going to see an absolute freeze in transaction volumes, but we'll cover that on Friday. And this is a shot of One Vanderbilt. We're gonna make a right here near the Hyatt Hotel, and we're gonna walk all the way to the east side because we'll be able to see the buildings lit up a little bit better. Who Dat Dave says real estate was an overpriced bubble that needed to be deflated. This is simply a correction, in my opinion, says Who Dat Dave. Yeah, I mean, it'd be great to see real estate valuations come down. And I think we're probably going to start to see that in Q1 and Q2 of next year. But I think maybe to sort of be a contrarian, I always like to give both sides of the argument on the streams, just so we don't get conflated with what I call confirmation bias. Because one of the things that, I believe is I think that real estate prices are going to decline. And it seems as if I tend to hang around a lot of people who share that consensus view. Now, I also like to try to find different ways where I could almost disprove my thesis to try to keep myself on the right side of things. So where I see a potential sort of warning flag as it relates to home price declines is that exact statement from the chief economist at the National Association of Home Builders saying that housing starts are down. Because any sort of expert that you talk to, any home builder you talk to, especially in submarkets like California, would tell you that we've been underbuilding for years. And this type of interest rate environment is not helping to bring about more supply. Now, the only thing that may help bring about more supply is if people just default on their mortgages and they go into foreclosure, right? I think that's maybe the number one thing. Dark horses, there is nowhere to escape right now. Everything is in the toilet. Bond market is horrid too. Cash is the play for me mostly. Yeah, well, I think you're right. I mean, one of the things that you could hide out is in cash. I mean, if you look at the Dixie, we've had unprecedented dollar strength, which has just been crushing emerging markets, especially emerging market countries that have a ton of dollar-denominated debt, right? Now, to your point about the bond market, now the main topic of tonight's conversation or tonight's stream, podcast, whatever you want to call it, is Goldman Sachs earnings report. Now, one of the highlights from this earnings report is exactly sort of what we were talking about yesterday. We knew that investment banking revenues were going to be down big. And I said that sales and trading team or global markets team at Goldman Sachs, I think they were going to shoot lights out. And they did. They did. They perform really, really well. And they tend to perform really, really well when markets are extremely, extremely volatile. So this is Third Avenue. We're going to walk all the way over to First. But the Goldman Sachs fixed income trading team generated $3.53 billion. That was up 41% year over year. Insane. 41% increase in fixed income trading, which I guess makes sense, right? I mean, we've had unbelievable volatility in the bond market. Treasuries. I think that 10-year U.S. Treasury yield as of today is now back over 4%. I mean, we've been having massive, massive moves. The bond market has been selling off. Liquidity is very, very thin in the debt market. To Dark Horse's statement. So Goldman Sachs sales and trading team cleaned up. Equities missed a little bit. So equities traders at Goldman Sachs brought in about $2.68 billion. That was actually down 14% year over year. But overall, from a profitability standpoint, so if we want to talk about net income, right? So revenues minus your COGS, costs of goods sold, all that good stuff. Goldman Sachs generated $3.07 billion in Q3. That was down 43%. So profits were down across the board at all the major banks. Now you may be thinking to yourself, well, profits of $3 billion, not bad. Yeah, but compare it to this time last year, right? 2021 was an absolute boom field, gangbusters for these investment banks because rates were low, IPO activity was at all-time highs. A lot of these banks were doing these SPAC deals. Equity underwriting was fantastic. But now IPO activity is down 99%. And Goldman Sachs and a lot of these other investment banks, their whole bread and butter is the traditional investment banking business to generate that fee income. Okay, this is 2nd Avenue now and East 42nd Street. Looks like they're doing some sort of construction here. Wow, look at this view here. All these American flags with the beautiful Chrysler building in the background, as well as One Vanderbilt. Hey, GX72 is here. I see Abdullah. Good to see you guys. Julia M says, I think the market is rallying because folks are still buying luxury goods, etc., and traveling. People still have money taking out credit cards, Amex, etc. Says Julia M. So Julia, I'm going to tell you a quick story. I'll tell everybody a quick story here. So somebody on my block, one of my neighbors, is a VP at Tiffany, like the jewelry store. And to Julia's point, this is what he told me. Because I just said, we're just BSing. I think I was getting the mail and we ran into each other. Just neighbor talk. He asked me how business was. I asked him how business was. And the first thing he said to me is that he said, I would have thought that this crazy sales buying, or a lot of my clients, would have subsided. And he's like, it just doesn't subside. And this made me think of something we talk about all the time on the live stream, which is the wealth divide in this country. And what I mean by that is, generally speaking, the top 10% of Americans are doing great, because ever since, I would say 2011, as we've come out of the great financial crisis, we've been living in an environment of ZIRP, or zero interest rate policy, extreme quantitative easing, which has just accelerated and ballooned the net worth of many, many Americans who owned assets, whether that be equities, whether that be real estate. We gotta wait for the red light here. And those people are doing great. But during that time of quantitative easing, you saw very, very little class mobility as it relates to the lower and middle class. And you've sort of seen this culling, for lack of a better term, of the middle class. So you have this almost very dystopian type two-tier society where the extreme haves and extreme have-nots, and these wealthy people are spending like crazy, and they still continue to do so. And again, this is anecdotal, but if we want to get into some more concrete data, we can. But my neighbor told me, he's like, Tom, they just keep coming in and buying this crazy stuff. And he was telling me about a story in Bal Harbor. Okay, so for those of you who don't know where Bal Harbor is, it's in Florida. Very nice neighborhood. And they're custom building like this $15 million piece of jewelry for a client. And the sales associate is going to make a crazy, crazy commission on it. So many people would say, okay, if people are spending, $14-15 million on jewelry, how could you argue that there is a recession? And I think it may be rather simple to do that. I think Sparks Steakhouse may be here. Hold on. I gotta see. It's somewhere around here, I think. I would just argue that there's a recession amongst middle-class, normal people. Like me and probably a lot of people who are watching this stream. And I think what really created that problem is this sort of monetary experiment that we've been embarking on. Oh, this is Pfizer right here. Ever since the conclusion of the 2008 financial crisis. So I think to Julia's point, it's weird to see the spending patterns and the habits between classes. It's really crazy, really crazy. And again, that is just an anecdotal piece of data. So don't, take that home to the bank and say, that is statistically proven. This is just an anecdote from a conversation I had with my neighbor. Hey, Andre Almar says, what recession if all I can see is buildings popping up everywhere? Well, I think a lot of that construction boom, and I think you make a good point. Because these are the type of opposing arguments I think we need, gets us thinking. I think it's very good. I think a lot of this development, again, has been due to the readily available access of cheap financing. And, Andre, one of the things that we were talking about today is a major piece of economic data that came out from the National Association of Home Builders. So the market sentiment index for October absolutely fell off a cliff, got its face ripped off, falling 8 points to 38, okay? When many economists on Wall Street were expecting a 43 reading. And out of all the respondents, right, of home builders out there, the number one response as to why they're so pessimistic on the housing market is higher interest rates. So maybe that thesis sort of has legs to say, look, lower interest rates or artificially suppressed rates is what has caused all of this housing boom, so to speak, or the all these buildings that you see. But if you think about what these home builders are saying now, now that rates are at 7%, a lot of that sales transaction is falling off a cliff. Hey, Felipe is here. Good to see you, Felipe. Steve CR says building materials is going up. We will see less construction when companies run out of supplies, says Steve CR. So Steve, I actually have a question for you, and I have a question for the rest of the group. So I think we've been hitting on the argument about rates for a long time. We get it. I think we've been hammering that into the pavement. And I think everybody understands. But to Steve's point, think about how much it costs you to build a new piece of construction. Not necessarily all the raw materials, but what about the manual labor? All right, we just got to do a quick segue here. This is way more important than the financial markets. This 99-cent dollar slice place is the best in the entire city. And I'm not just saying that to sort of be funny or witty or something like that. I'm serious. This dollar slice place is actually good pizza. So if you want to visit here, this is on the corner of East 43rd Street. Right behind Grand Central Station. It's actually very good. Think about labor costs, right? If anybody's in the construction business, or if you own your own business, maybe like an HVAC company, electrical contracting service, chances are you've been experiencing wage inflation. It's not cheap to pay somebody to do all the HVAC or wire the electrical facilities in the house. So I think a combination, to Steve's point, of building materials, raw materials, and just manual labor, the cost of labor, is another factor. I think it's a good point. Dark Horse is going and get a slice. I ate dinner tonight. So I actually went to this pretty good dim sum place. I've never been there before, and it's right, we might as well walk past it. It's right behind the Empire State Building. It was actually really good. I would definitely go back. Okay, this is Lex and 43rd. Let's walk up a little bit. We'll go to Park Avenue, might as well. Barry Bell says, with less homes being built, wouldn't there be less demand for home building materials? Yeah, and so that's sort of, why I wrote down that quote. And this is why I think the next 5 to 10 years is going to get really, really interesting. Because there's already a lack of supply. Now, I understand that that could change if people are forced to sell. I get it. I totally understand that. But I think consensus would say that since the great financial crisis, we've been underbuilding, right? That has to do with a number of reasons. I think, horrible zoning laws and, local laws and municipalities, things like that. But if we have the chief economist of the National Association of Home Builders coming out, Robert Dietz, and saying this is going to be the first year since 2011 that single-family housing starts are declining. Well, if we look out 10 years, isn't that technically a bull thesis for real estate longer term? I don't know. Maybe. Hey, Deep Value Alex. Alex, good to see you. I see Marcy. Marcy is our good moderator. Hopefully you're well. Hey, Penelope is here from Tennessee. Always a pleasure. Al Baker says Netflix crushed it. They did crush it. However, I'm a little bit iffy on Netflix. Now, if you guys follow me on Twitter, if you follow @WalksWallStreet, I posted a monthly chart of Netflix going back to its IPO. And it seems as if they found support on their multi-decade trend line. And it just so happens to coincide with this positive earnings report. However, and we sort of talked about this at the beginning of the stream, here's my issue with Netflix that I think it's concerning me. Number one, it's such a crowded market. There's so many players. You think of Peacock, you think of HBO, and obviously I understand that Netflix is as a subscription service, but how many of these new 3 million subscribers that Netflix added are customers that churned and they re-signed up, right? I want to understand how sticky these customers are to the business, right? So in my world, software or SaaS, selling SaaS, at my previous company, one of the main thing all of the managers would hammer us on is don't do the deal unless it's going to stick. Don't do the deal unless it's going to stick. They would rather us sign up quality deals into longer term contracts so we could ring that register every month so we could prove to Wall Street that our ARR is going to be very predictable, right? Oh, we got the FDNY. Shout out to the FDNY. We appreciate them. Because in a SaaS business or a SaaS model, software as a service, Wall Street really, really likes those businesses because it's very, very predictable revenues. However, if you notice, if you've ever sat in on one of these earnings calls at one of these SaaS companies, there's a metric of churn, right? Or net dollar retention. If you just have a bunch of salespeople, slamming deals and then the customers churn, well, that's not predictable revenue. That's not a business. And I think what we're seeing now with Netflix is a lot of churn. And my concern is that if somebody sees, wow, a lot of fire activity here. I hope everything's all right. This is the 432 Park Avenue building. Beautiful addition to Billionaires Row, fantastic. But if somebody sees that maybe there's a new show coming out on Netflix, they'll subscribe for maybe 3 months and then they'll cancel the subscription. I can't really invest based upon that. Now, maybe the stock will perform well and outperform over the next 5 to 10 years, maybe. I don't know, I just don't think it's for me. I don't think I can handle that. JR says Netflix is down 60% this year. Yeah, it was down like 80. But good to see you, JR. So in light of the major investment banks reporting earnings. Right here, this brand new building. So we are on Park Avenue right now, which is pretty much Wall Street. Now, I know what you're thinking. Wait, Wall Street is in Lower Manhattan. I get that. However, once quantitative trading and algorithmic trading and the internet came about, a lot of the investment banks and hedge funds moved uptown to Midtown Manhattan and Park Avenue. Now, if you think about the New York Stock Exchange, and I think many of you already know this, very seldom does actual trading activity happen there. Now, there is still trading activity, but almost none. It's pretty much just like a TV studio, and that's because there doesn't really need to be trading activity happening there. A lot of the settlements actually happen across the river in New Jersey, because everything is all electronic trading now. So this is JP Morgan Chase Jamie Dimon's office, but they are building a brand new one across the street. This thing is going to look amazing when it's done. Hey, John L is here. Says, I agree, massive competition for Netflix. Now, John L, we were talking about a Wall Street Journal study that they ran, and they said that the average American household signs up or subscribes to about 3 to 4 subscription services, because that cost is still cheaper than traditional cable, right? And nobody really watches traditional cable anymore. This is the Hemsley building. It looks great, all lit up. Hey, Ryan Beck, good to see you. This is time to move the stock exchange to Texas. Funny. Yeah, Ren 10 says, Tom, you're probably not used to the weather anymore. It's a cold night in New York. I think it's gonna get down to like 42 degrees. You know, it was raining last night. That brought in a little bit of a cold front. So it's cold. I'm cold, man. I'm ready for Miami. Hey, Jacob O'Brien is here. Says, Tom, do you think that people leaving California to other states is forcing the middle class in other states to compete for housing? Yeah, I think it's a big problem. It's all about supply and demand, right? And I think we could use like Southern Florida as an example. So during COVID, a lot of people, made a big exodus and started buying real estate in Florida. And I believe a lot of these housing prices are very inflated, especially in like Miami-Dade County, Broward County. And that's because you had, at oftentimes, very wealthy people from the Northeast, New Yorkers, people from Boston, New England, Connecticut, buying homes in Southern Florida. And we're so used to paying egregious prices. We're so used to saying, wow, a 3-bedroom, 2-bathroom home for $500,000, what a deal, I'll pay cash. That's not the norm down there. So that has been really, really, pushing a lot of native Miamians out. And this is not just exclusive to Miami-Dade, right? It's happening in parts of Texas. It's happening in parts of California. One of my good friends that has a wife and kids, he said, look, during the pandemic, I had to get out of San Francisco. He's like, I couldn't do it. Crime was ramping. So he bought a place in San Diego, California, where it was a little bit cheaper. But so many other people. So I think, basic supply and demand and migration is pushing those home prices up. So yeah, I would agree. Yeah, Clarence Jackson, Austin, Texas is another good example. There's been a ton of that activity. Now, do you think you could call that gentrification? Is that an appropriate term or no? Maybe I'm using gentrification because that's like it happens in New York, but is that an appropriate term to use for this instance? Would that be an appropriate term? Yeah, no, right? It wouldn't be appropriate. Anyway, we're walking past Capital One, but I wanted to quickly talk about a specific segment of Goldman Sachs that came out of Goldman Sachs's earnings report. And if you noticed, if you guys want to follow right along with this, if you type !GS, so !GS in the chat, I actually programmed the Nightbot to drop the Q3 2022 investor deck in the chat for you guys to read right along. Now, we understand and it's obvious that the big moneymaker at Goldman Sachs is their traditional investment banking business and their markets business, right? You could think about trading operations, sales and trading. We talked about how investment banking revenue fell off a cliff, but that was to be expected because deal flow and M&A is down substantially, and IPO activity, initial public offering, they're down about 99% year over year after the 2021 boom in initial public offerings, right? And one of the ways a lot of these investment banks make money, or the main way, is the advisory fees, right? Advisory fees in an M&A, equity underwriting, and debt underwriting fees, and the like. And that's their big money maker. But Goldman Sachs, since 2018, I think, was the original initiative, if we could call it that, to break into the consumer banking and the retail banking arm or division. Because for those let's just sort of define it for those people who don't know, if you think of JP Morgan Chase, a Bank of America, they have a big investment banking arm, right? So you could think corporate banking, equity underwriting, but they also have, retail banks. You could walk into a Bank of America location and get a checking account. JP Morgan Chase, you could walk in to a retail location and get a checking account. There's no Goldman Sachs, retail branch, right? They're an investment bank. However, they've tried to make their headways or their initiatives into trying to capture their retail business by one initiative called Marcus by Goldman Sachs. Now, obviously, the main goal here is to grow account balances, right? They are a bank after all, and they want to grow account balances. But one of the things I noticed from the analyst call, and we sort of predicted this, we talked about this yesterday, but almost every single analyst that was asking questions on the Goldman Sachs conference call was hammering the CEO of Goldman Sachs, David Solomon, relentlessly about maybe this is a miscalculation. You're not profitable in this segment. It's a money loser. I get you made that big sort of, deal with Apple for their credit cards, but it's still a big money loser for the bank. On your core competencies and your big money makers, which is investment banking, which is global markets, sales and trading, and asset management too. And David Solomon actually got a little bit upset on the call. And at some points, it was almost getting a little bit awkward. And I wrote down what David Solomon said. And I'd like to read that for you guys as we're coming up on one of my favorite buildings in New York, which is the one and only Seagram building. It's my favorite building in the city. So David Solomon said, and I quote, "Our investment banking and markets business is core to who we are. It will continue to be core to who we are, and it drives our earnings and performance. We are the 5th largest asset manager in the world, and we think we have an opportunity to grow that. Platform Solutions is a handful of smaller business opportunities that we are investing in hopes to branch the size, scale, and abilities of Goldman Sachs." Now, when I mean Platform Solutions, that is their third segment at Goldman Sachs that they're trying to invest in, which is the consumer and retail banking. And many investors think this is a big miscalculation for Goldman Sachs and that they should pull out of it altogether. Hey, Teresa Diaz, thank you so much for your $2 donation. It says 22,600 subscribers. Wow, that's insane. Well, thank you everybody who's been joining the channel. If you guys are enjoying the live streams, feel free to leave a like and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami. Now, I'd like to ask you guys, is anybody in the chat or anybody listening a customer of Goldman Sachs Marcus? Or do you have a bank account? And I'm talking about the retail side, right? So Marcus by Goldman Sachs is their big retail push. Anybody's a customer or know anybody that's a customer? I think I may create an account just to sort of review it and see if I like it. Once again, Park Avenue East, 52nd Street. This is my favorite building in the city. Clarence Jackson says you should get DJ D-Sol on the stream. Yeah, that's another funny thing Clarence brings up. So the CEO of Goldman Sachs, his side hustle, I guess, so you could speak, is he's a DJ in Manhattan. So he goes around to different nightclubs DJing, which is kind of unique, kind of interesting. Amante says, if you had 10 million liquid, would you invest it all in index funds, ETFs, or hedge funds? I don't know if I'd invest it all in one thing. I'd probably launch a real estate M&A type business. Oh, is that right, Clarence? All right, so we are standing outside of the Seagram building here. I think this building has some of the best views in the city. We're overlooking 432 Park Avenue, which is just a block away from where they had that big jewelry heist, I think you could call it. It actually happened right here. I actually work out of this office building sometimes. But the Seagram building is my favorite part of the city. Hey, Tish TV says, hey, Tom and everybody, good to see you. Khan says, I agree that Goldman Sachs should stick to finance. Oh my God. Rug pull, good to see you. Yeah, Treasure Trove says Goldman Sachs pays 2.35% on their high yield savings. Yeah, so Goldman Sachs is trying to make that push into the retail segment. Now, there's rumors on Wall Street that one of the reasons why this venture didn't turn out well is because there was a lot of animosity and infighting within the investment banking division and this sort of, to use their terminology, platform solutions. And so there's been a lot of turnover. So the exact address is 375 Park Avenue. This is my favorite building by far in the city. And here's the reason why. Look at how far away from the street they built the building. So when you come out of your office, this is your view. You see all of Park Avenue, and you have an amazing view of the brand new 432 Park Avenue on Billionaires Row. Yeah, Vonda Howard says that happened in New York. That seemed very suspicious. Yeah, it happened at 430 Park, which is my WeWork office. And at 3 o'clock in the morning, like a big van came and just barreled through, like a couple guys barreled through the front doors and stole like $500,000 worth of stuff. And you have these two very peaceful water fountains here. But if you want to learn a little bit more and dive a little bit deeper into Goldman Sachs earnings report, I would highly advise you do that. If you type !GS in the chat, I actually programmed the link to the deck so you could actually follow along and scrutinize the slide deck from the earnings report. And if you guys want to keep up with me on Twitter, I tend to post my thoughts and interact with viewers and sort of hang out on Twitter at Walks Wall Street. But I might as well take you guys past 430 Park Avenue, where one of the WeWork offices is, and let's see if Maybe they fixed the glass. Maybe it's all boarded up. We'll see. So I wrote down 3 things. I always try to sum up an earnings report, and I know you can't really do that in 3 sentences, but as it relates to Goldman Sachs, here's the 3 sentences that I wrote down that if you guys could just take away, 3 main things, this is what it would be. It would be investment banking revenues were significantly lower compared to Q3 of 2022. Financial advisory revenues posted significant declines as industry-wide completed M&A deals declined drastically, right? And that's something that we've been talking about. So you have, investment banks get paid off of advisory services if a business wants to acquire another business, or if a business is getting acquired, right? Maybe they'll hire an investment bank like a Goldman Sachs, Morgan Stanley, JP Morgan Chase, and they make a lot of money off of the fee income, and that was down significantly. And that could also give a little bit of a glimpse into the future health of the economy, because many analysts were asking the CEO of Goldman Sachs, David Solomon, about the deal flow pipeline. So they call it the pipeline. And didn't look too good. Let's just say that. Number 2 would be equity underwriting and debt underwriting revenues declined significantly for obvious reasons like we talked about before. But the global markets division performed very, very well. And I think if you sort of think about the big picture, right? Once market volatility picks up, traders need volatility to make money, right? So Goldman Sachs may have a proprietary trading desk where they trade the firm's money to make money. It looks like they fixed it. I don't see any broken glass or windows here. But to top off, the final comment for Goldman Sachs earnings is that the fixed income traders at Goldman Sachs cleaned up shop, performed very, very well, generating over $3 billion. $3.53 billion, the fixed income traders at Goldman Sachs, and which makes sense because the bond markets have been absolutely just insane as it relates to volatility. So this is the Ferrari. I wouldn't really call it a dealership, maybe just a showroom. I think it's very fitting that this is on Park Avenue because maybe as all the bankers and hedge funders get their bonuses and whatnot, maybe they want to spend it here. I don't know. Not a big car guy. Hey, rug pulls his walks from Wall Street. Go back to the Ferrari and let's see the store. All right, I'll show you guys some. I think we have a lot of new people, so I'll give you guys a look at some of the Ferraris here. So Dan Zhang says that's an F90, SF90. It costs between $800,000 and $1 million for a car. Oh my God. Yeah, as you guys can tell, I don't really know anything about cars, but to spend $1 million on a car, that's, I don't know, maybe if I had the money, I wouldn't be saying that, but I don't know, it seems a little excessive. Now, there's usually another car here. Maybe they're replacing it in the showroom. JR says, yep, it costs $1 million. Could you imagine spending $1 million on a car? You must, in order to do that. So here's one thing I did hear about Ferrari, and for all the car guys and gals in the chat, let me know. Supposedly not just anybody could buy one, right? I think you have to get invited. Is that true, or is that fake news? Supposedly, Ferrari is very, very strict also in relation to like the modification of the vehicles. Like you're not allowed to customize it. Is that true? Fund fees is the insurance, maybe 100 grand yearly. Are you seriously? Oh, Noah says that's actually true. Is that really? So how do you get the invite for that? What do you get, a letter in the mail or something? All right, so team, this is the WeWork office at 430 Park Avenue. And this is also where the jewelry store right here. Now, I'm not gonna try to pronounce it because I'm horrible at the pronunciation, but this one was robbed. And it looks like everything's already fixed. So they barreled through the doors right here and stole about $500,000 worth of jewelry right here. And I go to work every day, well, pretty much every day right here. Crazy. Crazy, crazy. Now, does anybody know any updates for that? Did they get caught? Now, here's another additional comment, not to sort of go off the rails. I know this doesn't have anything to do with the Walks on Wall Street topic. But if you know that you have very expensive jewelry here, wouldn't you put it away in like a case or a safe? I never knew that they just left it out in the cases. Anyway. All right, everybody. So this is a very, very famous building here in New York City, right off of Park Avenue. And this is one of the newer additions to Billionaires Row, right here on 57th Street. This building is called 432 Park Avenue. And check out how tall this building is. Now, it comes fully equipped with the swimming pool. And if you're in my office, about on the 14th floor of the WeWork, it's like a community co-working office, you could actually see into the swimming pool. And it looks very, very beautiful. Now, I believe this is one of the taller buildings on Billionaires Row. We also are going to cut over to the west side of Manhattan tonight, where I want to show you guys Central Park Tower. Now, Central Park Tower is one of the newly completed buildings, and the top 3 floors of the building is on sale for a deal, a steal. It's like they're giving it away. $250 million, $250 million. Now, I'm sure the specific clientele who would purchase a property like that may not be rate sensitive, but I'll give you guys another shot of 432. Andre Almar says, I'm signing the check right now. You know what we could do? And this is actually, we probably could do this. We could create a Walks on Wall Street DAO where we pool money together to buy the top 3 floors of Central Park Tower. Now, this is actually very possible. We're not going to do it, but it's actually possible. I think we may be able to pull it off because there was a group of, I guess you could call them activists, maybe for lack of a better word, that tried to do this exact strategy to buy the US Constitution, but they were actually outbid by our good friend over at Citadel Securities, Ken Griffin. So in theory, we actually could probably create a DAO, pull all of our Ethereum together, and buy the top 3 floors of Central Park Tower. And maybe all of the subscribers to the Walks on Wall Street channel, you guys could use it maybe once 1 week out of the year. I think that'd be cool. Chrissy Hansen says, that sounds good. If you guys are interested, I'll tee it up. Just kidding. For anybody. Oh, look at this. I think this guy has his bumper dragging on the floor. Glass of beer 12 says, I got $100,000 to invest. Now, not to give anybody ideas, but Dan Zhang says, Tom, I think if we combine yours and Action Kids viewers together, we could afford Central Park Tower. Yeah, I mean, it's possible. I mean, that is an actual true story. It's called the Constitutional DAO, where they created a DAO to pull Ethereum together to bid to buy the Constitution, and there was only one bidder that bid them out, and it was the CEO and founder of Citadel Securities, Ken Griffin. D is here, good to see you, D. I don't have any water tonight, unfortunately. Joseph Hardaway says, what's up, everybody? Good to see you, Joseph. Zozo Bob says, Ken Griffin is developing a super rail in Miami. Really? Yeah, so for example, like this is the Rolex store here on 57th Street. But I would assume that they don't actually have the physical watches out on display after hours, right? So why would they have watches out on display at that jewelry store? I don't know, it just seems a little bit weird to me. Itzy says, can you show the IBM building? Yes. I will show you the IBM building. I'll go, there's actually some pretty nice artwork in here. So we'll take a look at that. Everybody, I think it's gonna be good to do a quick overview or review, right? So if you've been watching this stream for the past 2 weeks, we pretty much did a deep dive into every single earnings report in the banking sector. Now let's talk net income, okay, or profitability here. All right, so this is the IBM building. The lobby has a lot of nice artwork in here. Now it's interesting, if you go all the way to the back, the IBM building actually connects to the atrium that is also connected to the Trump Tower. So if you go into the IBM building, you walk all the way to the back. I'll show you guys where you could go. And this is open to the public, by the way. It's open to the public until 10 o'clock at night, I think. Yeah, it opens at 8 o'clock and it closes at 10. So you go in here and this atrium connects the Trump Tower to the IBM building. And I actually used to do, get some coffee here, hang out. It's actually pretty nice. And there's a door right here. And this is how you get into Trump Tower. And where you see these two apples, these are like very expensive, I don't know, I guess you could call them what? Monument statues. That's how you get into the IBM building. Yeah, so this is open to the public if anybody wants to go. All right, so real quick, we'll wrap up the banks because we've been hammering on them. But I think it's important. I think the banks, talking about the banks, and this is why every earnings season, I pick a select few companies to really do a deep dive, and I always cover all the banks because the banks is a proxy for how not only the US consumer is doing, but for how the entire economy is doing. This is Tiffany's. I think I gave you guys that story about how my neighbor is in sales there, a VP. But once we get out of this little scaffolding maze, we'll just quickly review all the Q3 net income at all the banks. Just so everybody that's viewing the stream can really get a grasp about how demolished earnings were on a year-over-year basis. So net income at JP Morgan Chase, CEO Jamie Dimon, it was down 17% year over year. Okay, so net income is your revenues minus all of your COGS. Maybe we'll cross this way. So JP Morgan Chase net income down 17%. Bank of America net income down 8%. Citigroup had a negative 25% earnings decline year over year. Morgan Stanley minus 29%. Wells Fargo minus 31%. And Goldman Sachs, who we talked about today, minus 43%. Now, still very profitable quarters, right? Because even though Goldman Sachs had net income declines of 43%, they were still profitable to the tune of $3.07 billion. But I think these numbers really showcase the power and the strength of all of that economic stimulus, the fiscal spending, the monetary easing of monetary policy, the expansion of the balance sheet that spurred all of this deal-making activity. You know, I have some friends who work in investment banking here in the city, and in 2021, they were so busy, they didn't even have time to literally get up off from their desks because they were working on so many deals. But that's why they had record revenues. That's why they had record profitability. But again, IPO activity down 99%, deal flow significantly down. Obviously, that's going to result in a reduction in profits. So I don't think anything to scream Armageddon about, but you can really see visually the strength of monetary policy when we're printing a bunch of money and liquidity is readily available. So right across the street is the flagship Apple store here on 5th Avenue. Hey, Andres Alpha. This is all the IB slaves working $100 an hour. 100 hours a week are going to get smaller bonuses. Yeah, I mean, this year, bonuses are obviously going to be a lot smaller, but I think that's to be expected, right? I think there was record bonuses on Wall Street last year, but again, there was a lot more deal flow. This year, not as much. So now that's another thing. I want to talk about one more thing, because everybody's talking about, you know, the culling and the layoffs at all these investment banks. Now, we talked about Bank of America last night. So if you want to look at the investor deck for Q3 earnings of Bank of America, if you type !BAC in the chat, the Nightbot will drop the link to the deck. They actually added headcount. Headcount increased by 8% in the IB division at Bank of America. Now, granted, headcount is severely lower at Bank of America. I think the CEO, Brian Moynihan, here, before I say that, let me give you guys a view of, this is the very famous Plaza Hotel. This is one of the most expensive hotels, by the way. But if you have the money and you enjoy the building, you could actually buy residences here. You can buy condominiums and apartments. Now, the CEO of Bank of America, Brian Moynihan, said that Bank of America today operates with less people than they did in 2011. And that's obviously due to their investments in technology, automating away a lot of the monotonous and tedious processes. So definitely software is eating the world, if anybody's heard of that term. So right here, this big building is called the Steinway building. So this is another massive megatall skyscraper that was recently built right here on Billionaires Row. And I'll tell you guys something cool about this building. We actually have a viewer of Walks on Wall Street that designed the building. So his architectural firm did all the design on the building, which is pretty cool. Steve CR says, how much do you think one night is at the Plaza? I'm gonna say $750 and up. I've never stayed there, but is that a good guess? Could anybody maybe fact check us on that? I mean, you probably have rooms at the Plaza that go for at least, you know, some like of the suites probably go for $5,000. Hey, Donna, California says most of the personal bankers in my Wells Fargo branch were laid off. Well, that's not good. Well, thank you for that insight, by the way. I think it's very important to keep tabs on that type of stuff. Now, I will say the reason why Wells Fargo, and they sort of alluded to this on the earnings call, the reason why Wells Fargo is having I would say facing the brunt of the layoffs on Wall Street is because they have the most exposure to the mortgage market. And what did we talk about earlier in the live stream? Transaction volume or mortgage originations have pretty much fallen off a cliff. Also, think about people refinancing their mortgages. Who would refinance their loan when we are just emerging from a decade of ZIRP, zero interest rate policy? So the vast majority of people probably have a 30-year fixed of 5% or below, according to bankrate.com. As of today's recording, the average 30-year fixed rate mortgage is 7.11%. Hey, JF says, Tom, the plaza is usually $900 to $1,600 a night. Granted, it doesn't have the charm of Motel 6. Yeah, that is definitely true. Hey, Tariq is here. What's up, Tariq Khan? Good to see you, my friend. Thank you for joining us. Hopefully you had a good Tuesday. AA says, Tom, the plaza is owned by Prince Walid bin Talal. I didn't know that. Thank you for sharing that. So let's make a right on Billionaires Row and walk down 57th Street. Just because I have to start heading over anyway, because I have to walk back down to 34th Street to get the train to go home. Donna, California's like, but is there a coffee maker in the hotel room? There better be. There better be two of them. Zabatata is here. Welcome. Hey, Melee is joining us. Good to see you. Says, hey, Tom and everybody. Good evening. Good evening to you, Melee. If you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you are new. We do these live streams about 5 days a week between New York City and Miami, and we'd love to have you guys along for the ride. Hey, Frank is here. Says, hello, dude. Amazing views. Thank you for sharing. Thanks for being here, Frank. I trust you're well, and hopefully you're having a good Tuesday. Yeah, Western Mass Dave is like, Tom without coffee? Yeah, that wouldn't be a good look. So you know what else I noticed, everybody? So I walked into the grocery store today, and you know what I saw? These people are already starting to put out the Christmas stuff. Now, there's a big running joke about capitalism. It says capitalism loves to push the holidays back at least a week every single year. It seems like once Labor Day hits, the Halloween stuff is out. Once we get about 2 weeks before Halloween, the Thanksgiving stuff and Christmas stuff is like falling over each other for shelf space. Anybody else seeing holiday stuff already out there? Miguel says, is anybody living on Billionaires Row or just assets for investing? Thank you. Yeah, I think a lot of people will live on Billionaires Row because this is what you'll have, right? You'll have a lot of these trophy apartments that are like big penthouses, right? 5 bedrooms, 6 bedrooms, massive. Those are pretty much what you call piggy banks in the sky, is a terminology that the New York Post used. And many people who are buying the 5-bedroom, 6-bedroom apartments on Billionaires Row. Very seldom do they even visit or stay in those apartments. So for example, in this building, the Steinway building, are there people that are living in here? Yeah, absolutely. But the most expensive apartments are usually bought by foreign investors, let's say from, Saudi Arabia, China, Taiwan, Brazil, Nigeria. And they really just use it. I mean, if we really want to call a spade, they really just use it as a place to park their money. I think I heard the most expensive unit at 432 Park Avenue, the owner has never even been there, allegedly. But some of the smaller units, that are only maybe 10 million bucks, yeah, there's probably people living there year round, for sure. Absolutely. Absolutely. But it's the big apartments that are like $250 million, right? So for example, in this building that I'm going to take you guys to now, which is Central Park Tower, the top 3 floors of that building is selling for $250 million. Now, I don't know if it'll sell for that price, but if it does, probably the person's not actually going to live there. We'll see. All right, so this is another famous hotel here. It's called the Quinn. The address is 101 West 57th Street. And I think it's actually better for us to cross the street so I could show you guys the facades, if you will, of the buildings. Deep 844s is modern day neocolonialism. Hey, George Hernandez, good to see you. This is Tom. I'm not surprised by them putting out Christmas stuff early. Yeah, when does Christmas music start to come on the radio? That's when the real kicker comes in. Hey, Troy Atman. This is Tom. Have you ever seen a billionaire walking around New York City? If so, who? Let me think about that. No, I don't think I have. I've seen very notable people in finance walking down Park Avenue. You know who I actually just ran into not too long ago? David Faber. Anybody familiar with David Faber? I ran into him not too long ago on Park Avenue. Right outside 430 Park, actually. But besides that, no, not really. I mean, probably, I would assume. I would say this. Yeah, I probably walk past billionaires maybe every day. You just don't know who they are. But anybody that I know personally, no, not really. Yeah, Troy's is nice. Love David. Yeah, he's great, man. He gets a lot of flack on CNBC, but I think he's fantastic. All right, we're going to quickly knock out all 3 of these buildings, figuratively. So this is the Steinway building. This is going to be the big grand entrance. And if you notice, the lobby's not even done yet. But if we look all the way up, it's pretty much complete. Now, I will say, I used to live in Central Park South, and the crane, there used to be a crane that used to sit atop of this building. It fell down twice. Now, how it didn't kill anybody or cause serious damage, I have no idea. But that crane fell down twice right here. And I remember they put our building on lockdown for an hour and said, yeah, the crane fell down again. And I'm like, oh my God. Speaking of cranes falling down, I'm gonna show you the original building on Billionaires Row that started the entire trend. And this is 157. This is my personal favorite, I just love it. And the developer is the Extel Group. And there's a very famous video during Hurricane Sandy. Now, maybe many of you in the chat weren't in New York for Sandy. Maybe many of you were. But there's a very famous video when this building was being built, right here, 157, of the crane actually becoming detached and spinning around like crazy during Hurricane Sandy. It was wild. Yeah, Clarence Jackson says, I remember when 157 crane almost fell down during Sandy. It was spinning around like crazy. Yeah, I mean, that's another thing about these super tall towers. You know, my uncle is one of those crane operators. I don't know how they do it. Now, there's two specific unions in New York. I think it's Local 14, which is the Union of Operating Engineers, heavy equipment operators. But this is the main entrance to 157. And here's the cool thing about 157, which I love. On one side is the 5-star hotel, the Park Hyatt. And on the left side is the Residence, which is 157. Now, the residences share all of the amenities of the 5-star hotel, such as the swimming pool, the gyms, the massage rooms. It's just an incredible building. And this is the building that started the trend here on Billionaires Row. So we talked a lot about Citadel's Ken Griffin, and I believe he owns maybe the top 3 or 4 floors in this building, which is 220 Central Park South. And this is one of my personal favorites here on Billionaires Row with the gold top. But the newest one, which is the most popular, is this massive one right here, which is Central Park Tower. And if you look all the way up the top 3 units are selling for $250 million, $250 million. Insane. Oh, Kevin Miller says it's great there. I highly recommend it. Are you talking about the Park Hyatt? Oh, Asian Noodle Company off of 5th Avenue. I'm going to check that out. Let me screenshot that. You know, I went to a good dim sum place today behind the Empire State Building. It was fantastic. Double Eagle says, Tom, you should become a real estate guy in New York City, big money. So I'm in the process of getting my real estate license in New York and Florida, but mainly because I want to get into the business of big real estate M&A. So think about big multifamily. So maybe if I have the real estate license, I'll just get you guys into some of these cool apartments and show you around. But my main goal is, over the long term, is use some of the money that I've made in tech sales to acquire big, or raise money to acquire big multifamily properties. Hey, Stevens, is the Russian Tea Room, wonder how it's doing given world events? You know, I think it's still open, but it is really expensive, not gonna lie. So Russian Tea Room is right next to the Carnegie Hall, which is right here. Unfortunately, it has all scaffolding over it. Carnegie Hall is one of my favorite places in the entire city. I think I told you guys this story. Back in the day, when I used to work at the Marsh and McLennan building, 45th Street, that we had a big blackout in the city. And all the power went out from 34th Street onward, I think up to about 110th Street, Cathedral Parkway. Like, the whole city was a big blackout. And so I walked up to Carnegie Hall, and since the power was out, all of the performers at Carnegie Hall set up shop in the middle of 57th Street and was doing their performance. It was one of the coolest things I've ever seen in my life. It was awesome. So this is the Brooklyn Diner. This place is also very expensive. I see sunshine after rain. Good to see you. Mandolin. This is, what was the name of the noodle restaurant you talked about earlier? If it was me, it was probably Momofuku Noodle Bar. That's my personal favorite. All right, team, here it is. This is the main entrance of the beautiful, brand new Central Park Tower. Now, this is standing directly under, across the street from Central Park Tower. Look at how tall this building is. It's unbelievable. It almost doesn't even look real. It looks absolutely gorgeous.
Going out? Oh, nah.
War Walker from the 305. Good to see you, dude. Yeah, isn't it? I think this is the tallest residential apartment building in New York. So getting back to the markets here a little bit, we had a little bit of a rally day today on Wall Street, but did you notice we had a big fade? The market faded almost throughout the entire day. And especially on the NASDAQ composite, we rallied all the way to the 21-day exponential moving average, and we were subsequently turned away by that. Now, here's what I will say. Tomorrow, in my view, by far, and this is looking uptown, Broadway, at the Trump International Hotel and Tower. It looks like somebody's actually in the top penthouse. We have Tesla, ticker symbol TSLA, reporting earnings tomorrow. Okay, that's gonna be a big make or break for the market. So if Tesla bombs earnings tomorrow, I think you're gonna see extreme volatility as it relates to the NASDAQ and the S&P. Excuse me. Because if you think about it, Tesla makes up a very large weighting in the indice. I think Tesla makes up almost 2% of the weighting in the S&P 500. So if we see a bad earnings report from Tesla and they gap down like 5%, the indice is probably going to be down as well. Now, we talked about this last night, but I think it's appropriate to restate it again for maybe those of you who missed the live stream. Now, on a forward PE basis, okay, so the S&P 500 is trading at 2023 earnings, so forward earnings of 15 times 2023 earnings. Okay, so that's the forward. Now, historically, not super cheap, but it's also not super expensive. But the feeling that earnings revisions are going to continue to come out rather negative. So if Wall Street analysts start knocking down these earnings estimates for next year, well, then maybe the S&P is actually trading at 18 times forward earnings, which means in order for this market to have a valuation correction, you know, you could see another 15 to 20% downside in the indice, because my thesis is this. Beautiful dog, by the way, right in front of us. Fantastic. My thesis has been this. The vast majority of the sell-off across the board of the major due to interest rate movements. So there needs to be repricing here to account for higher rates. I think that has been the vast majority of the decline. Now, what I believe hasn't been baked into the cake is declines due to earnings revisions. So if we have an earnings recession in the United States, where companies start to report earnings and they give profitability warnings, they slash forward guidance, that's going to be an issue. And if that's the case, you could have, a 10% earnings revision to the downside, and investors will be forced to reprice these assets. So I think this earnings season is going to be very critical to pay attention to. We've already seen the earnings reports of the investment banks, still beating analysts' expectations, but profitability almost across the board is down 30%, mainly due to the absence of that very strong investment banking revenue, but something to watch out for. So as it stands right now, the S&P is trading at 15 times 2023 earnings, but that earnings estimate could be revised well lower. So speaking of big banks, this is Deutsche Bank Tower, formerly known as the Time Warner Center. Hey, Robert. Says futures are up. Yeah, what are E-minis looking like? The ES, S&P. Last time I checked, we were up maybe about 1%. Dan Zhang says, Tom, do you think if Tesla also tanks after earnings, Cathie Wood be in major trouble for ARK? I do think so. So I'll give a prediction. I hate giving predictions, but we're coming up to the end of the stream here. I think it'll be fun. I think we may see Tesla pop on earnings. But if you notice, if you have TradingView or something like that, pull up a daily chart of Tesla and pull up a 50-day and 200-day moving average. You'll notice that Tesla is extended to the downside. I'll give you a quick view of Billionaires Row from Columbus Circle. You'll notice that Tesla is pretty aggressively extended to the downside from the 50-day and 200-day. So I think we could see Tesla pop on earnings, rally into a declining 50-day, and then in the next trading day, so it's just Thursday or Friday, you have a massive fade, and everybody fades that earnings report, I should say. So I think you may have some sort of a trap action where they bang the stock up after hours on the report, and then they fade it into Friday or into Thursday and Friday. Again, that's just total speculation. I don't even like doing that stuff, but that's what I would say. But what do you guys think? You think Tesla is going to report a good quarter? What are your thoughts there? Donna, California says, I love Lincoln Center. Since we're closed, maybe we'll go. Maybe we'll check it out. So Tariq Khan says, Tom, Tesla will drop about 2:15 in the AM and then pop to 2:30, 2:46. Okay. Now, I think the number one thing that investors will probably be looking for in this earnings report, in my opinion, is gross margins, right? Because what has all of these analysts, every single Tesla bull that you talk to, what is the number one argument? And it's a pretty good argument that they have for their bull thesis of Tesla. They say something along the lines of, Tesla at scale is being able to maintain roughly 29% gross margins on their vehicles. Compare that to GM, compare that to Ford or any of the other major autos, crushes them in gross margin. Talk about GM or Ford, maybe 8% gross margins, maybe. So the theory there is if a lot of these factories could get up to 100% capacity and really churn out EVs at almost 30% gross margins, I mean, that's money. And that's an interesting thesis, but do you think we're going to see any margin compression? in an inflationary environment, global semiconductor shortage, raw material shortage, do we think that Tesla is going to see any contraction or margin compression? I don't know. They saw a little bit last quarter. It'll be interesting to see. The LT prod says yes. Blues writer says Tom is obsessed with Tesla. I think I may be obsessed. So the LT prod says Tesla's going to beat on revenue, but miss on EPS. It's possible. Joseph Hardaway says a medium chance to beat guidance. Well, I mean, Tesla, if you guys are following me on Twitter, if you follow @WalksWallStreet on Twitter, the monthly chart of Tesla looks horrible. It looks like it's carving out the most egregious head and shoulders pattern I've ever seen in my life. But if you guys are enjoying sort of what we talk about on these live streams, podcasts, whatever you want to call them, if you scan the QR code on your screen and punch in your email, I write a free investing newsletter where I talk about US equity markets, emerging markets, fixed income, the housing market. And we usually try to put it out every other Tuesday after the market closes. So if you want to read the newsletter, stay informed on my general market thoughts, feel free to sign up. Punch in your email and you will receive it. Okay, so Steve CR says Tesla already being manufactured in the United States. Biden pushes electric, pulls down oil. Tesla building additional rail shipments, can't lose in the long run. That's true. So also the Inflation Reduction Act, as well as the Chips and Science Act, is providing, oh, it's really windy up here, is providing massive subsidy for EVs. So you talk about tax credits to, I would say, entice buyers of EVs. So the government's definitely going to throw a ton of stimulus at EVs in general. So I think you're right. That's a good point. All right, let's cross the street. I think I'm gonna have to go back and get another microphone, maybe for the next live streams, because I think it's gonna start getting windy in New York. And I think you guys are gonna get wind noise in the microphone. Yeah, John is like, the wind sounds strong. I'm getting hammered by the wind, but it's all right, it feels kind of nice. So this is PJ Clark's. Has anybody been to PJ Clark's? I think it's all right. I think it's a tad bit overrated, just a touch. But this is one of my favorite spots in all Manhattan. This is the one, the only Lincoln Center. Check out the fountain at Lincoln Center here. Yeah, Laney James, Tom, I love this time of year. The dark horse is, I hate to rain on your parade, but most Americans outside the bubble of New York City elites have zero interest in EV. I don't know about that. I think here's sort of my stance on EV. We shouldn't be discouraging regular I would say, traditional vehicles to push EVs. Does that make sense? I think you should let the free market decide, and as you invest in the infrastructure, like the charging infrastructure and the like, you'll see more natural adoption of EVs. Because to your point, let's say if you live in rural America, some people drive 50 miles to work, there and back, 100 miles a day. Is that really going to be sustainable for EV infrastructure if we don't have, readily available charging infrastructure? Probably not. Probably not. Marcy says that's not true. More people would do EV if it was accessible. Yeah, that's the thing. I think you're right. Look, over time, just with any new piece of technology, price is going to come down, right? So as adoption grows and as production goes at scale, price is going to come down. But to expect the average American consumer to be able to drop, 50, 60 grand on an EV, I just don't think it's there yet. It's going to get there, but I think it has a little bit of ways to go. Hey. Oh, sure.
Yeah, thanks a lot.
Oh, thanks,
I was watching the live stream in my apartment. I came down to say hi.
Oh, I appreciate that, man. Thank you. You don't have to, though. Are you sure?
Yeah.
Oh, thank you, man.
Make a donation.
I appreciate it.
All right.
Hey, but nice to meet you.
Yeah,
very
nice to meet you.
The dog's fantastic.
Yeah, I'll watch you on YouTube.
Oh, beautiful. Thanks, man. Enjoy your night.
Yep.
Thank you so much. That's cool. Very nice guy. Beautiful dog, too. Dark horses, you guys are dead wrong. It makes us completely dependent on China. Not going to happen. Yeah, I mean, I think these are interesting conversations to have, right? And I think that not everybody's going to agree. Look, maybe you'll be right. But I think as technology evolves, it'll become cheaper. I think, Dark Horse, you do make a good point. I think you do make a good point on the dependence of China as it relates to a lot of rare earths. And I think that's why, I don't know if I want to say this. It's going to get too political in the chat. Yes, screw it, whatever. So anyway, you guys, this is the Lincoln Center fountain. But yeah, we just met a viewer. Fantastic, very nice guy. Thank you guys for the support. I really appreciate it, by the way. I'm going to put you guys down to enjoy the sounds of the Lincoln Center fountain for a minute. If I could sit there and listen to that all night, I'd probably fall asleep. Yeah, but thank you to the viewer. I mean, you guys are very nice, and thank you for the support, and thank you for watching. It's very nice to meet people on the street. That's sort of why I like live streaming. We get to sort of interact with people. I get to read the chats, but it's also nice to meet people in person too. It's kind of cool. But anyway, this is what I was going to say. I sort of, I'm just going to say it. It's not bad. So as we're talking about rare earths, right? Tesla taxi right here. as we're talking about rare earths, right? So the batteries for these EVs are going to require a lot of lithium and other, I would say, just rare earths in general. So I think we need to be, as a country, as Americans, we need to be very aware of where we're getting this stuff from and where we're buying it from. Because one of the main components, like cobalt, for example, the number one producer, miner, however you want to call it, of cobalt is the Democratic Republic of the Congo, where it has been proven, oh, that is brutal, where it has been proven that they still have slave labor there and child labor. So for all of these, you know, quote unquote ESG people, if you care about ESG so much, well, that's a big issue. Also, if you look what's going on with this horrible war in Ukraine, Ukraine and Russia are very abundant in lithium. Now, the old saying about lithium is that it is so abundant and it's so scarce at the same time. So maybe this could be one of the reasons why Putin is extending this war on for so long. Now, that's sort of why I didn't want to sort of say that, because I know people are going to bombard in the chat about the war, and I know it's very political, and I respect all sides, but he makes a good point in the chat about we got to be careful where we're getting this stuff from, because we could be enriching, you know, dictators that force slave labor upon their citizens and child labor to mine all this stuff. And that's been proven. And Elon Musk has actually been outspoken about that as well. So I think it's a good conversation to have. All right, team, we are going to head back down to 34th Street. JR says, yes, Tom. Yeah, I mean, and look, you're seeing a lot of these, you're seeing a lot of people actually pull money away from BlackRock because, look, I'm a huge supporter of renewable energies. I want a cleaner climate. I think everybody does, but you could go overkill on something, right? And I agree with Jamie Dimon when he says that a lot of these climate activists has been taking it way over the top and actually doing more harm than good. And I was on a call with one of my friends who runs a hedge fund out of Chicago, and you know what he said? He said something really interesting. He said, I'm against ESG, not because I don't care about the environment, but because I care about it. You know, and that really resonated with me. Because if you look at the energy production from coal this year in places like China and other parts of the world, even in Europe, we've had to increase very dirty coal use. Excuse me, I lose my voice. Usually at hour 2, the voice blows out. But we've actually been having to rely on extremely dirty and non-clean energy because we've been moving too swiftly towards renewables when we don't have the infrastructure that's quite yet ready for it. So to Jamie Dimon's point, he's all about the transition to renewables, right? I think everybody is, but you got to do it in a way that's, you know, not run by a child, right? You got to be an adult about it. You got to make sure you have the infrastructure in place. Right? You can't just flip the switch and expect, you know, everything to be sunshine and roses in a year. It's just not based in reality, right? So I don't know. That's sort of the piece I'll say to that. And it's just funny how the whole thing played out because a lot of these people out there, that want all these renewable energies. That's like no more new drilling on federal lands, no more financing for oil and gas companies. The whole thing is blown back in their faces times 10. And we're using just horrible means of energy production, such as coal, which is just so dirty and horrible for the environment. Shutting down nuclear power plants, which is the most pristine and clean and safe. I don't really want to go on a tirade, but I think you guys get the picture. I thought that guy was coming right for me. All right, so this is Columbus Circle. I'll show you guys the main water fountain here at Columbus Circle. Yeah, Dan's saying, that's a good point, Dan. So Dan says, Tom, our country actually has the cleanest energy, which is natural gas. It is just the fracking part that could do damages to the environment. Very true. You know, I'm not sure if, I'll tell you guys a quick story. So there's a town, because my phone is gonna die. Okay, quick story, and then we gotta cut loose here. I think this is a fun stream. Hey, Teresa Diaz, thank you so much for the $2 donation. This is congratulations on 700 subscribers. It's insane. Well, thank you guys for joining in the streams. I never in a million years thought it would grow this big. I think we have good conversations here. So thank you all for the support. Speaking of fracking, there is I think it runs from upstate New York right around the Syracuse, central New York location. I think all the way down to about West Virginia. It's called Marcellus Shale. I want everybody to do some research on that. But back in the day, there was huge protests in the central New York, like the Syracuse, Rochester locations in upstate New York, about like all this anti-fracking movement, right? And not to sort of get into the politics of it, but I think if a lot of that stuff was allowed, and I know it's very, dirty and harmful for the environment, I get that. But the one point I want to try to make is if that ever was allowed, I think that would have revitalized upstate New York almost to be like, you could think about it like the Texas oil boom towns. It just would have been insane. And many lower income communities were sitting on these huge deposits of Marcellus Shale, it was called. And it would have been a big life changer. But I do understand the risks to fracking. I get it. The point I'm trying to make is they were literally sitting on gold mines up there. All right, team, we'll do a quick recap and then we got to wrap, because I'm a little bit too far away from the train station tonight. So we talked about Goldman Sachs earnings. Okay, they came in beating analysts' expectations on both the top and the bottom line, but net income was down about 43% for the year off the back of lower investment banking revenues. However, their markets team, which is the sales and traders, did very good, record bond trading. We got some key housing data from the National Association of Home Builders. That data absolutely falling off a cliff. And the chief economists from the National Association of Home Builders actually coming out and warning that for the first time since 2011, we are going to see a decline in single-family housing starts for the first time since 2011. And the index fell about 8 points to 38, while economists were expecting a reading of 43. So just plummeting through the floor of what the expectations were for many economists out there. Lastly, on Monday, which we forgot to cover, We heard from the Empire State Manufacturing Survey, which decreased to negative 9.1, when many economists on the street were predicting a negative 2.5 reading. So just totally obliterating economists' expectations to the downside. Obviously, a lot of the damage in the single-family housing market has been due to the massive move in interest rates. The average 30-year fixed-rate mortgage, according to Bankrate.com, right now is 7.11%. And tomorrow we'll be talking about Tesla's earnings. So team, thank you everybody for coming out tonight. I think we had a very good discussion. We have a lot of new viewers here in the chat too, so it's very nice to meet all of you. Thank you for the gentleman who I met face-to-face here on the street. Thank you for your support. Your dog was fantastic, by the way. And we'll see you tomorrow. So everybody have a great Wednesday. Joan, Line Sync, Steve, thank you. Abdullah, Mohammed, Jen, Dana, California, Wendy, England, NNB 045 from Canada, Boston City Limits, Rachel Abreu, Latha, Sunshine After Rain, Cayenne Pacific, Western Mass Dave, Steve, Sabrina Fair. It's the Mighty Bull. Have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. Marcy, thank you. Love is kind. We'll see you guys tomorrow, 8:30 p.m. Eastern. Peace.